Hi, folks. So, a lot of folks have been telling me to talk about silver, and today my team has prepared a very in-depth study of gold and silver ratio, and we are going to talk about whether silver is the trade that you should be getting in or not. So, if you look at the silver chart, this is the last almost 50 years or more of the silver chart, and you can see that silver in dollar terms is just about breaking out from its 1980s high. I mean, that itself tells you how tough it is to invest in silver. Those who were invested in the 70s have waited 45 years to really see a new high, and which also is not really sure right now. We are at the tip of that high right now. Now, people are of course wanting to invest in silver because silver is it's cheaper to buy physically, and silver seems to be more popular with a lot of folks. And currently, the gold to silver ratio. So there is a ratio which is basically gold divided by silver, and that ratio is currently at 85.5, which historically has been in the 60s, and in the 70s it was as low as 30s and 40s also. So the folklore goes that whenever this ratio is very high, you should buy silver, and whenever this ratio is very low, you should buy gold. So the question is that should we consider silver as compared to gold for our portfolio given the current tailwind? So let's deep dive into this subject and look at some data. So we all know the reasons for the why gold is rising, right? Central banks are buying, and there is a sort of a monetary system change that is happening in front of us. Uh, and silver is also recently rising. From the start of this calendar year, gold is up 43% and silver is up 47% in INR terms, which is this statistic itself is going to surprise many folks, but that's what the data is. If we talk about the last 50 plus years, gold and silver in rupee terms have had a very high correlation of 0.71. You very well know that as close as the correlation gets to 1, it becomes like a mirror image of each other. And you can see every time there is a spike in gold, there is a spike in silver. Every time there's a drop in gold, there's a drop in silver. So the correlation is there. It is not 1, but it is very, very high. So silver tends to follow uh, gold, and with a extreme volatility behind it. Silver has a lagging feature to it. So, for example, uh, if we see the period 2007 till 2008 mid, both were moving hand in hand. But then suddenly, post GFC, you found that gold dropped 18% and silver dropped 42%. So the correlation was strong in the directional sense, but the volatility or the extent of which the fall in silver happened was much much more than gold. So 42% fall there. And once post that fall, gold started to recover, silver also started to recover, but with a lag. So gold immediately started to recover, silver took some time and then started to recover. So whenever gold will fall, silver will fall harder. Whenever gold will recover, silver will have a lag and then recover. So these are the kind of characteristics of silver which are found many times. So similarly, in 2020, both were moving together side by side, and then suddenly there was a small dip in gold, and silver cracked like nobody's business. Gold was down 10%, silver fell 30%, and then gold immediately started moving up. Silver was simmering around here, and then there was a huge catch-up wave that happened in silver, and it actually did more than gold in that period. So why does silver tend to fall first and then rise later during market panic? There's a logic to it. The silver value is basically derived out of a hybrid need. 50% or more of the demand it comes from the industry usage. So in 2024, for instance, this is sourced from the Silver Institute. Total silver demand was 1.16 billion ounces, of which industrial demand, because silver is used everywhere. The mobile that you use has a lot of silver in it, for instance. 680 million ounces was industrial demand for silver. So the industry's demand itself determines a lot of outcome for silver's price, which is not the same as gold actually, because gold is getting into the central bank reserve kind of demand space. So whenever global economy slips, let's say there's a recession, markets are panicking, The industrial demand collapse actually price is priced in when silver really collapses hard. And because silver is tied to the industry more than gold, it suffers much more than gold on the shorter term. But eventually, with a lag, it tends to follow gold. So let's look at the metric called the gold and silver ratio. You will be able to appreciate this much better. Gold to silver ratio, which is also called GSR, is a simple measure of how many ounces of silver it takes to buy 1 ounce of gold. So gold price per ounce divided by silver price per ounce. The implication, whenever this ratio is high, like I was saying, the ratio is currently around 85, it means silver is cheaper versus relative to gold. And whenever this ratio is low, it means silver is expensive in relation to gold. And why is that? Because this is the sort of circle of life for silver, that whenever global uncertainty arises, silver will fall along with the markets. Gold will not fall much along with the market. Gold will fall and quickly go back up. Silver will fall really badly. This will lead to the gold silver ratio increasing as silver prices drop. The high gold silver ratio causes fund flow to go into silver like it is doing right now. And then silver rises and the gold silver ratio reverts to its mean. And this cycle sort of continues on a very long term basis. If we see the gold silver ratios of the last 52 years, it has averaged at about 64. And every time it has hit a gold silver ratio of near 80, 90, 100, there has been some spectacular gains in silver. And you can see that currently we are somewhere near 86, which is also much higher than the long term mean. So let's also do one more study and verify this thesis, that what would have happened if we had bought silver whenever historically GSR was above 85. So we went back into history and we saw that there were only three times that GSR was 85 or above. And where the first phase when it happened was in September 90, another one was in November 2018, and now in August 2020. By now, I mean in this current cycle in August 2023. So when the first time it happened in September 90, when GSR crossed 85, we if we had bought silver on that day, by now, over 35 years, silver would have given you 11.75% returns, very similar to gold's 11.57% return over 35-year period. In 2018 November, again GSR was very high. At that point, also, if you bought silver, you would have gained 21.2% till today versus gold of 21.3% over 6 years and 10 months. And in August 2024, if you bought silver at that point of GSR being at 85 or above, today silver would have given you about 62.5% versus gold of 58.5% over a 1 year period. So in all three cases when GCR was extremely high, did you buy silver? The longer term outcome of it was very similar to gold. So I've summarized this over here. Three periods: silver returns, gold returns, and the outperformance is barely anything. So at best, this strategy that because of the ratio we should be buying silver, it concludes to me at least that there is hardly any meat to that thesis, that if the gold silver ratio is very high, we should sell our house and buy silver. And because the returns at the end of the day are similar to gold from that point, at least maybe in reaching that point, the most of the gains have already been achieved. Now, if we see a very long term period kind of study for 52 years and take a 10-year rolling return. So, gold 10-year returns at any point of time, if you bought gold and held for 10 years, and silver, if you bought at any time and held for 10 years, what would have happened? So, you can see the yellow line or the golden line is that of gold. It has never crossed below zero, even in the worst of situations in 1990, even in the worst of situations post COVID. If you held gold for 10 years, you were never in a loss at any point of time. Whereas in silver, that was not the case, where you lost oh, post 10-year returns at minus about 11 or 12%. And here again, you had 10-year returns at negative returns. So silver can still give you a lot of pain, but gold over the long term does not give you that kind of pain. And the primary purpose of holding a different asset class other than equity is basically to reduce the uncertainties in the portfolio and not compromise much on the return. So the real question is, does silver really provide protection against equity market volatility for long term equity investors, or is it simply another asset which can be traded basis your trading strategy? So now let's also look at the drawdown charts of gold versus silver. The last 35 years of data is here. If we see silver chart, you can see it has had massive drawdowns, 55% kind of drawdowns also at times, when in the same time period gold was at half. So it is much, much more volatile than gold, but Nifty is similar to silver, I would say. Nifty also has had, drawdowns which were more than 50, 60% at times. So having a volatile asset combined with another volatile asset, I don't know how much of a comforting strategy is that. The equity should be combined with gold instead, which has lower volatility, and it's able to outperform Nifty whenever Nifty is in extreme drawdown. Silver does not have that kind of a super quality that gold has had, in my view. So the key conclusion that is there is that if we were to ask that is silver attractive relative to gold at the current price, answer is may or may not be. GSR surely is above the average, but it also necessarily means that it's undervalued relative to gold. It need not necessarily mean, I mean. And in the recent years, more than the uncertainty, gold prices are driven by a sort of a big bull in the room, which is the central bank. Silver is getting driven by speculators mostly, right? So there is a pull in gold which is causing silver to come along with it. Silver does not have its own primary reason of rising. It is a pull by gold, so it is a sort of a derivative to gold from that point of view. It's not principally, there is no principal demand for it, if you know what I'm trying to say. Can silver help in reducing risk? So silver has seen even more extremes than Nifty 50 in the past 35 years of max drawdown of 57%. So I would not choose silver to match with uh, Nifty to improve my portfolio raw mat ratio or Sharpie ratio. Uh, does silver provide extraordinary returns as an asset? That also we can see. So different decades have been studied here. Each decade, what has been the CAGR for each commodity that has been put here. And you can see that the best of the years in the last 52 years, best of the decades, we've got 28% CAGR. In that decade, gold did 31, and it had a decade of negative 10%, which is crazily bad. Gold still managed 5% here. Then it has had very nominal returns all these years, and gold has had more steady returns versus Nifty. And whenever uh, Sensex has not done so well, in these 2 decades, for instance, gold has given a good companionship to that versus silver. So basically, I would think that between the two, silver and gold probably is a better partner for equities. Now, diversification is only good until it is reducing our risk and drawdowns from equity markets without compromising much on the returns. That is the bottom line. Gold is our ideal partner, and in that respect, it ticks off all the necessary requirements that we need to diversify the portfolio. Silver, in my mind, is a great tool for trading. If you want to do a trade, if you want to punt, if you feel like you want to do a short term trade, I think silver is really good for that. Or if you have a very long term plan and you feel that I don't want to buy gold because it is very expensive, but silver is within my reach, then over a very long term, silver will give you very similar returns to gold as we have seen in the past. So that is also something that can be washed out for. So how did you like this video? Let us know in the comments. Have you ever invested, or do you plan to invest in silver? Do also let us know that. And you can also watch this other video that I'm showing you on the screen. If you like our content, do subscribe to our channel, do like and share this video. If you like the content, do give us more motivation by sending in your comments and by subscribing to the channel. Thank you. Bye.